Hey there traders, welcome back for episode 38 from the StockBandit.tv. I hope that your weekend has been a good one and you're ready for another week of trading, because tomorrow morning that opening bell is going to ring. So let's take a look at the major averages, kind of see what the big picture looks like before we get going this week. It's the thing that's always going to help us determine our course of action for trading individual names, individual stocks out there that are so likely to be influenced by the general market action. That way the indices can sort of act as a leading indicator for some of the potential trades that we may be eyeing. So up first, we're going to take a look at the NASDAQ, which last week cleared this important level right here. That was the 1450 zone, and punched through that. And then we saw a little bit of a pullback on Thursday and on Friday, coming back down, and we have tested this 1450 zone successfully. Got under it a little bit on Friday, but still were able to close 1457. So far, that's good. It's good to just see this index try and respect that level. That doesn't mean it must hold it, because of course if this pullback does continue into Monday or Tuesday, then of course that level could very easily be broken, and that does not mean that the hopes of this rally off the low are hanging on that 1450 level. It's simply something that shows a little bit of respect on the part of buyers, and that's something that this market is going to need if it's going to recover from here. But big picture, if we zoom out, you could still make a case for a double bottom here in the NASDAQ. We did undercut that 52-week low from November just a few weeks ago, but we've rallied nicely since then, for one, and if a pullback is met with some buying and a higher low is established, then that means we could easily turn and rally and establish a higher high, and there it would be your trend change from that point forward. So something to keep an eye on. It does put a little bit higher importance on the next few days, but again, that's only going to be in the near term. Ultimately, there's not a whole lot of clear-cut levels between the low right now as it stands and last week's high up here at this 1509 zone. So we're just going to have to watch and kind of monitor the character of this pullback that started Thursday and Friday and see if it continues and just how deep does it happen to carry. For the S&P 500, you know, we've made a pretty nice run back up since this move off the March low. So to see this index recover roughly half of this last decline is good to see. Obviously Friday we saw some option expiration related heavy volume. We have pulled back a couple of days here for the S&P 500, but it would not be surprising to see this index come back down and maybe test this 740 zone that has proven to be so important. So that's a level to keep an eye on. But on the upside, 803 is the level to be watching. That's last week's high. Finally, for the Dow, same picture as the S&P. Good sell-off. Very good bounce since then, but starting to pull back here. More heavy volume last week, options expiration related. But here again, we could pull back and test a couple different levels the way I see it, or we could bust right through them. I just don't know. There's not a real well-defined area right here that is to say, here is where a pullback should go. The first one I'm going to be watching is 7100. That proved to be some temporary support a few weeks ago. And then, of course, the whole number at 7,000. You know, psychological levels always tend to be, you know, somewhat important. We saw this index bottom out at 6,500. We saw it top out not too far above 7,500. So watch this 75, 71 level. Also for the Dow, that was last week's high. Those are the levels to keep an eye on in the next few days. So as always, thank you for joining me for this episode. I will be back soon with more videos, but in the meantime, trade like a bandit.